Good morning. Gerald Panneton, Chairman and CEO of Terra Resources. We're here at the PDAC 2022 in front of our booth. It's a quiet time because it's early in the morning and the gates pretty much open around 10 o'clock in the morning. Sentiment investor, lots of people, definitely. Lots of companies, lots of investors. The mood is relatively, I don't know. I'm not asking the mood. We are here to talk about our project and the current market, which is you have to live with the market, adapt to it, and make the best out of it.
Well, Gerald, thank you for joining us. Hot off the, I know it's going to get a bit busy in the next sort of 30, 40 minutes or so we'll crack on. Okay, you're obviously PDAC, first time it's been run since I think COVID hit us in 2020. You're there to do, what's your expectation of what you're going to get out of it? Because it's like you say, it's a different economy, whatever the mood is, but people's expectations right now seem to be on risk off. So what do you say in that environment to people?
It's a simple thing. I mean, we could paraphrase it and say, in a tough market, you keep your head down and you keep working. You lesser the spending on certain things that you see will be useless. So you're very careful about your spending. There's no question. And of course, you still come to the PDAC. I mean, the booth was booked. Like you said, this has been 2 years without PDAC. The next one is going to be back in March of next year. But at the end of the day, it's an important contribution to the mineral industry. Toronto and the PDAC have been attracting more than 25,000 people every year for so many years. It's worldwide. There's a lot of people, but there's a lot of different niche because you're looking at the world. But, you know, I'm a Canadian person. I work in Canada. I've been at it for many, many years, since I graduated in 1985. I got a master's degree. I love geology. I don't need to do and work, but I love what I'm doing because I learn every day. I learn something new and I know I can create shareholder value. So you're here as a CEO or as a promoter or as running a company that does exploration all over the world, as a person of credibility that is trying to create shareholder value. And how do you do that? It's by aligning yourself with them. It's by talking with them. It's by being there. When a shareholder writes me a letter or an email, I always answer. Even if he owns 1,000 share or 1,000,000 share, he has the same right because he wants to know something.
Right. But what I want to get at is you talk about alignment, right? So yeah, I know you put money into this project, your own cash into this. You haven't bought cheap shares, you bought at market, right? And so remind me how much you're sitting on shares?
About 6 million share or about just under 3% of the company.
Okay, fine. Right. So you've done that. But you talk about being, having to adapt or adaptability or agility. In this market, have you seen anything like this? Has it been as bad as this before?
Well, it's hard because every market sometimes is different. I don't look at market. I look at what I have to do to make Terra successful. I do not of course, I pay attention to the market, but I don't live the market like people will complain about it, for example. I will not complain. I'm just going to adapt. If I can raise, it's like Detour Gold was built, the company I built over a period of 8 years, and probably the best timing of the industry for gold price. We had a run of 2006 to 2013 before it started going down significantly. This is like 7 years. So it was a 7 years market in the gold price due to a financial crisis that exploded in 2008, 2009. So this market is different. We have to adapt. Is our project good? It's high grade, high benefit, little risk, less money to invest, good infrastructure in Yellowknife. This is a great opportunity for an investor to invest in Terra because we are focusing on high grade, which means less investment in a mining town, in a mining camp that can yield a lot more benefit over the future.
Okay, so that's what I want to talk to you about. Timing, right? For Detour Gold, you timed it beautifully, right? You couldn't have timed it better.
Or was I very lucky?
Well, do you know what? There's a lot of very successful people who got lucky, right? So I have no problem with that. Someone's got to be lucky, right? And you had a lot of things that you also had to get right, and that's fine. But how do you adapt in an environment like this where the timing's not so good? 2020 was super. Nothing could go wrong, it seemed. 2021, a few signs appeared that maybe there are a few cracks. And then 2022 is going to hit us hard. The economy, supply chain issues, geopolitics, Russia, Ukraine. Everything seems to be coming at this moment in time to make people very nervous, reduce the amount of disposable income that they have, and therefore discretionary spend for investing. It's tough right now. So what do you, as a CEO, do? Because what I'm interested in is if the things that you do make sense to me as an investor, I should feel more comfortable. So what are you doing?
The most important thing to create shareholder value in a difficult market, it's to keep raising the dollars and not stopping the drill. But be careful about the way you're spending it. So for example, when you have tons of money, you could move faster. You can add more drills. You can have more targets. But in a situation like this, you have to have very good target that will generate something very good by the end. So you got to focus. It's all about this. Even when I came to work with David about 2.5 years ago, David was concerned. He was concerned about the geologists that were working with him, about lack of focus, using helicopter. Look, I brought the cost of drilling from $300 a meter to $200 a meter since I joined the company by cutting off the helicopter. The helicopter alone was like $50 a meter in cost. So I said, we are drilling in the winter on the ice for $200 a meter, and we're drilling the Campbell Shear, our most important target. And that's exactly what we've done. Even if, and the market for us has been, it's an old vehicle. I didn't start this vehicle. Look, when I came to the company, I had to put money in the bank because there was almost nothing left. And I had to do financing within 2 months of joining the company. So I didn't join a company in good shape. But look at the work done in the last 2 years. The amount of drilling. I think David in his first 2 years did 3,000 meters of drilling. Look, I've done more than 30,000. I think I've done close to 40,000 meters of drilling since I joined. Drilling is how you create shareholder value, not in going around with investor relations, telling you have the best story and you never drill it. I put my money in the ground. I put my own money. I don't even have any stock option as a chairman and CEO. And I push this company to create, produce, create value for our shareholders. And being aligned with the shareholders by buying my own shares on the market or through financing is basically showing you how much I endorse and I trust this company and the way we're going forward.
Right. So where are you now then on this? Because I'm kind of so keen to, because most times I speak to CEOs, they say, back the management team, back the project, etc. And I'm going to assume that you say that too. But where are we today with cash? Where are we today with drilling? How much more drilling can you do? When will you need to raise more capital? And here's the important bit. Do you think that you're going to have to include warrants going forward, given the market conditions?
I don't do warrants.
I know you don't, but you got to be agile. You got to adapt. Do you think you're going to have to?
Adapt to what? No, they have to adapt to me. I prefer to raise less money, like I did last winter. We turned down a guy who wanted to have warrants in February financing, an interest. And where the interest was big, it was $2 million. And he wanted a warrant for 5 years. And I said, thank you, no. I don't mind refusing money and raising less money under the terms that will make this company better and stronger.
Okay. You worried that he would play the warrant game, i.e. sell the shares?
Never done. Yeah. Build detour without warrants. I know the market is very different, but you know what warrants does. They sell their share and they keep the warrants. Okay? So they're not shareholders. They're warrants holders.
Yeah, no, we know the game for sure.
So why would I endorse something that is wrong for our industry?
Okay. No, I hear you. As a strategy, I agree with you. I think it's not a healthy thing for sure. Can we just talk about? You mentioned Campbell Shear earlier. Can we talk about what's actually going on there now and for the rest of this year?
Well, you asked me about our cash position. It's approximately just under $2 million, probably about $2 million as of May 31st. after all our invoice for me were paid. So after the check run, so we had about $2 million. We've done close to somewhere between 15 to 20,000 meters of drilling this winter. It's all paid for. It's all done. And would I raise money? Well, we have a resource coming up. There's an important catalyst coming in September. I'm not sure if it's going to be end of September or early September, but somewhere like September, October, we will have an updated resource following drilling of, look, our last resource is March 2021, 1.2 million ounces. Since then, I've been drilling the Campbell Shear south of the Con Mine. I've had some spectacular results in the 20 grams across 5 meters, double zone on Yellow Rex. We've had success at 1,000 meters. So we have a resource on the Campbell Shear for the first time coming soon.
Right. Okay.
September is 2 months away. So that's a big catalyst to eventually, most likely, do a big raise in the fall.
Okay. And what results?
If you do a big raise in the fall, then bingo, you can do 50,000 meters of drilling next winter. Right.
Okay. And with regards to what's going to actually be included in that new resource update? In terms of the drilling that you have been doing, how many additional meters will be in that over and above the 1.2?
In the current resource, since March 2021, all of the drilling of 2021 and winter 2022, which account to almost 30,000 meters of drilling.
Okay. And this will be effectively, obviously, a new resource. I mean, with the current 1.1, that comes from where?
We're going to add Campbell Shear,
right,
and all the drilling on Mispickle on high-grade mineralization, which was basically, Mispickle was discovered a long time ago and was not drilled over the last 5-6 years. And I told the geologist last year, you want to go back there, you want to show me the high-grade nature, and you want to be successful, we're not doing low-grade, we're doing high-grade. Propose me a program. So interesting enough, we turned the drilling from east to west to east using the lake and the ice bridge. And we were successful hitting almost like 60% of the hole as visible gold. Our recent hole, 14, intersected a new zone that was never intersected before, like 33 grams over 3 meters, full of visible gold. First hole in that zone. It's a brand new discovery in that area, in that sector. So look, I'm not saying the sky is the limit at Gold Terra, but we control 800 square kilometers. We have some very, very high spots. What would Mispickle become? Would it be 500,000 ounces, 1 million ounces, 1.5? It's multiple small veins, but very high grade. So on the ground, 3 meters, small tonnage, but with very good grade. Exactly what you want to go through tough time. You don't want to spend too much money on a low-grade deposit, which requires too much investment. Look, Detour cost $1.5 billion to build 10 years ago. How much do you think Detour will cost today? 2.5?
Yeah.
So we're talking about investing $300 million to build a 5,000 ton per day mill, have some high grade from Mispickle. The Crest pit is 6 grams. First 5 years. And we mined 6 gram material over a period of 5 years to go along with 10 gram from underground on the common.
Yeah,
you're looking at almost 200,000 ounces a year.
Yeah, exactly. So just on numbers, right? So I agree with you. I think the cost of building mines is going to get meaningfully more painful for companies. But what does that do in terms of the size of these discoveries and resources that need to be built out, right? Because you're going to have to add to your current resource meaningfully. So just on that, first of all, what do you think is going to be a reasonable number to announce to the market to get the attention that you need, positive attention that you need to be able to raise capital, right?
I think in September that resource update will turn some heads.
Okay.
Because I think that what we've been able to do on the Campbell Shear is that we understand to buy the Con mine, I need to get 2 million ounces, right? So that's priority number one. Now, whatever I find more at Mispickle, and I had another 1 million ounces of high grade, Mispickle can come in production after or later on. It's not, for me, I would put Crest and the Con mine back in production first and do 200,000 ounces. And in the background, you have Miss Pickle not too far to get permitted and developed to go underground. But you only have to permit 1 mill in town. And then you can basically truck high-grade mineralization. You know, the con mine, if I truck and I'm giving an increased cost, say 20 cents per ton per kilometers. The mill is 20 kilometers north of town. So it's going to cost me $6 per ton to carry it if I assume it's 30 kilometers. And I can buy those 2 trucks myself and do the trucking myself with our own employee, which will be lesser than a contractual because you only have a few trucks. So there's so much advantage being in town, in the town of Yellowknife, with 20,000 people, with all the infrastructures.
Right.
To reopen a great operation.
Yeah, I hear you. But you still got to kind of find gold and this resource.
Well, that's what we're doing.
Yeah, no, you are. But I want to ask a specific question, which is around the resource update. That is predominantly going to come from the Campbell Shear. In terms of Miss Pickle, there was
Miss Pickle.
And Miss Pickle. Okay, there was a small amount attributable from Miss Pickle previously, right? So as a percentage, are you expecting it to contribute meaningfully to the resource update?
I expect that we will have a good contribution from the Campbell Shear. So maybe 75% versus 25% for Miss Pickle.
Okay.
Something like that. But definitely the Campbell Shear, you can never compare the Campbell Shear potential to Miss Pickle. If you want to find 5 million ounces, you should only drill the Campbell Shear. But if you find another 1 million ounces of high grade at Miss Pickle, it should go eventually in the book because the potential is there. We currently now have 4 different high-grade veins. Look, it's work in progress. Give me $10 million tomorrow morning, and I'll drill faster, and I'll give you the answer faster.
Well, that kind of interests me. You know, you talked about 6 gram open pit and 10 gram underground. Those are good numbers. I mean, the economics should stack up. But how much of that do you think has been sort of eaten away by increased costs in terms of the inflationary component, even for an explorer?
Look at it very briefly. Just look at the value of 6 gram open pit and 10 gram underground. Okay, we do mining for $200 US a ton. 10 gram is worth exactly $600 US. You have $400 per ounces or per ton of margin. So you have 1,000 ton per day operation. You basically making $400,000 a day. You go to the open pit at Crestaram. It's not going to be a big open pit. Probably going to do 4,000 tons per day or something like that. We will have 6 gram material is worth $360. I should be able to do Crestaram for $50 a ton. There's no strip ratio. It's right at surface. It's a high grade vein basically I'm going to mine by open pit because it's the angle of the vein is 45 degrees. You go and just mine it to about 200, 300 meters, and then 300 ounces later. So you contribute 60,000 ounces a year from an open pit at 6 gram. That gives you $200 per ton of profit because it's 6 gram. It's not 1 gram.
Yeah. No. Well, look, there's some good numbers for people to kind of work out, do their own math, right? Very attractive. But of the speed, let's come back to the timing, the speed, right? So you've got what, 1 drill turning at the Campbell Shear, or was it more?
Currently, we just have 1 rig.
Right.
It's actually it has paused, and it's starting to be drilling very soon now.
Okay, fine. And then with Miss Pickle, is there a separate drill, or is that a case you're moving?
Miss Pickle was a separate program with a separate contractor,
right?
Which was just winter. We did 6,000 meters of drilling, as we said in the press release last week.
Yeah.
And we had some very good success. We still have half of the result pending on that program. So we're going to have a flow of news that will carry on all the way to the summer until the resource update. And we expect to go back to Miss Pickle next winter if money is there with a couple of drill again.
Got it. Okay. And hopefully post October, when you've done a raise, you can get at it a bit quicker. Right. So therefore,
timing of the resource is giving us the whole October, November, December to go around road shows, talking to people, and then do a raise at some point in the fall when we feel the attention and the support from the market is there.
Right. Okay. Right.
And my goal would be, look, I would raise, if the share price, it's always depending on share price. I don't like dilution, right? So for example, if I was to do a small top up before the resource, it would just make sure that you have a cushion You don't know what's going to happen in September. Even if the resource comes out in the most difficult market, in a crash, for example, you're not going to be able to raise money. So you always have to make sure that the company survives. That's my job. That the investors are there to understand that we're there to get through a tough time.
Okay, understood. And so, and again, in terms of resource update, because it's really, really important, is have you had all of the assays back from that, and you're just incorporating them into
the Campbell Shear? We are still waiting for, and we're still drilling on the Campbell Shear.
Okay.
So, but you have to have a
cutoff. Yeah.
Which is probably going to be at the end of July.
End of July. Okay. So we will continue to look out for those news releases talking about the kind of high grade stuff that you're seeing there. And then you've got to get to work on that. So, and what else do we have to look forward to? Because like a resource update in this market, sometimes the market just goes, don't mind, don't care. What's next? I mean, so what would be next?
Keep working at it. Keep creating value. If I take the 1.2 million ounces to a higher number, which of course we're bringing a new zone that was never, so we'll have also even part of the resource will be actually indicated because it's drilled on 50 meters. And we've already made the economics of that small zone. If I had a mill in town, now, if I was an operator in town with a mill, I would be able to put Yellowknife in production. It is economic without giving you a PEA.
Really? Okay.
Well, I can compose a PEA, right? But it's not according to protocol and to disclosure, right? But you can still do it by, we do that all the time to know if we're on the right track. Because if a project doesn't make sense, you don't want to go after it. Look, I've evaluated more than 300 gold deposits in my career. I know what it looked like. I know what the economics is.
But you couldn't raise money without doing some kind of economic study.
Oh, yeah. Well, we'll see what the market is. The market is the market.
And what do you do with regards to the mill situation? If it's hard to raise the money to build your own.
First of all, before you raise money to build a project, you need a feasibility study.
Yeah.
So it's a process. So if your pre-feasibility study, for example, is done next year because we reach our 2 million ounces on the Campbell Shear, and it's probably going to take us until the end of 2023. If I was in 2022 with all the money I want, I'll give you the answer by the end of the year. But I think with the current market, I'm going to have to wait until 2023 to have a PFS. But I could have a PFS by the end of 2023. And 2 million ounces, that's my goal.
Okay, there's your goal. You've given us some numbers, shared your thoughts on the market. And is the management team still excited? I mean, are you still buying shares? I mean, how's the management team feeling?
Well, the management team is slim. But the directors are, I don't even need to bring new directors to support this development of a mine. With my friend Louis Dion, mining engineer with more than 40 years of experience, senior VP at Barrick, ex-Campbell mine manager under Bob Smith. He's the true pearl to back all my numbers with him. Of course, then the processing is making sure it works.
Do you think there's a kind of there's something in the hunker down strategy, as in stop spending money? If this market's not reacting to anything,
no, the market has zero reaction on a brand new discovery, 33 grams over 3 meters.
Right.
No reaction at all. Actually, the stock went down that day for maybe half a cent.
Which is crazy, right? Because
at the end of the day,
most people go through their whole life not making a discovery, right? Let alone those sorts of grades, right? They don't do it. Yeah. If you put that out in 2020, you'd have seen amazing response. So given that environment, why bother? Why not just say, I tell you what, we'll just put our pens down for a second and we'll wait till the market wakes up?
You could, but at the same time, the news are there. They cannot be sitting in your bank account without getting them out. You need to inform the market on a relatively basis. The one thing I'm slowing down in July, August is the effort on investor relations because, as you know, especially in Europe, they go away for 6 weeks. So I told the guy in Europe, I said, we're a couple of people. I said, we're not going to release a lot. We'll make a push in September when the resource is out.
Yeah, I think that's smart.
So that's the kind of thing that you can do, which will be helpful.
Okay. Well, look, Gerald,
I'm gonna have to go soon because I have a
yeah, I know it's tempting. You got to go. I'm going to let you go. As always, I think it's fantastic. I like what you're doing. It's all smart stuff, and I appreciate your input on the market, the realities of the market. So we look forward to seeing you in September when this resource update is out, because that should change people's perceptions, shouldn't it?
Yeah. You know, Matt, you can always have multiple story. Our story is in Canada. It's in town. Everybody goes on. There's a great potential, maybe to bring it all the way to 5 million ounces one day, but one step at a time. My goal is 2 million ounces on a Campbell Shear and plus, and you can never own enough of a good story.